everyone, welcome back to another Top Growth Financial video. Today I'm going to be breaking down Context Logic, also known as Wish, and that is the ticker WISH. And what they are is they are an app that creates a marketplace for merchants to sell their products to these customers. Very similar to like an Amazon, even Shopify if you've heard of that one, except they're much smaller than those two big e-commerce giants. But they're doing pretty well for themselves so far. They have over 1 million merchants, they have over 80 million monthly active users, and they sell nearly 1 billion products per year. So with that being said, let's go ahead and take a look at their chart. Looking at their 1 year chart here, you can see that they just recently IPO'd back on December 16th of 2020. What an IPO is an initial public offering, meaning that their stock was not being publicly traded until that December 16th date. And they started out with an initial price of $24. It dropped fairly quickly within a couple weeks down to $17 and then moved up to $31 by February 1st, a couple weeks later. So there's a lot of action in that first month and a half. And then you can see after that, it's kind of just been downhill ever since. It dipped to its lowest point of $7 back in June, early June, got back up to 14 in late June within a month, and now we're back down. As of July 29th, we are back down to $9.85. So there has been a lot of action since that December 16th IPO date, both up and down. That is pretty common with stocks that have recently gone public. You'll see a lot of extreme spikes and dips along the way. So right now it is a little hard to gauge where we expect to see Wish in the future within the next year. But I'm going to try to break down this stock as best as possible and try to give you guys the most information to be able to make a better informed decision yourself by the end of this video on what you would like to do with this stock. One thing that separates Wish from a lot of these e-commerce companies is that they are very focused on low-cost goods. In fact, their target audience is customers who make $75,000 per year or less. And they're able to make these goods so cheap because they are partnered with logistics vendors that make that process from merchant to customer easy and cheap. So that's why they're able to sell their products at a lower price than a lot of these big e-commerce companies such as that Amazon and Shopify. And they've really been focused on that since they were founded back in 2010. Another key factor to their recent success is Wish Local, which they just started up back in 2019. And what that does is it offers you the option to buy local. So what you would do is in their app, you would enter your location and then you would enter a certain radius and it'll show you these merchants within a certain radius of you to give you that option to buy products local. And that has actually been a big hit for them so far because it's only been, a little over 2 years, and that already accounts for 8% of their total revenue. Alright, so now that we know who they are and what they do, we're going to get into the good and the bad of the company. And to start off, we're going to start with the bullish case we can make for Wish. Okay, so number one, their revenue comes from all around the world. The majority of their merchants are from China, but in terms of their customers, 46% of them are from Europe, 40% from North America, 5% from South America, and the other 9% from the rest of the world. So there's a lot of variety in terms of geography where these customers are coming from. Another one is their revenue by service. So they have 3 separate services that bring in revenue. Their core marketplace being the biggest one, which is the typical merchant selling to a customer, that accounts for 72% of their revenue. And on top of that, they're starting to get into the logistics game, which accounts for 20% of their revenue. And the remaining 8% is from their product boost, which is their marketing program. So there's 3 separate forms of service that bring in revenue for them. So the good news is that they're not fully reliant on just their marketplace. Another one is that they are still founder-led. So the original founder of this company, like I said, back in 2010, is still in charge of this company. And it wouldn't necessarily be a bad thing if it wasn't founder-led, but what's important here is really their ultimate mission, which is that affordable and entertaining mobile shopping. So it is good to see that it is still the same founder who still has those same goals and ambitions and doesn't want to change those core values. And lastly is their optionality, as I talked about earlier with Wish Local, that gives you the option to shop local, which has already proven in just over 2 years to be a very successful part of their business. So obviously they're doing a lot of good things over there, a lot of things you'd like to see in a company, but there is also a very prominent barrier case to be made as well, and we're going to go over that right now. So the first and probably most important point is their cost to acquire users, and currently they are spending more money on sales and marketing than they are bringing in gross profit, which leads me into the second point that they are not yet profitable. Those two kind of go hand in hand. But the big reason for this is, like I mentioned earlier, they are very focused on the low cost products. And they have shown that they're willing to spend a lot of money to keep it that way. Like I said, they were founder led and he has that mission, he has that ambition to keep those prices low. And he is really sticking to that so far. The problem is that it hasn't resulted in profits yet. And their revenue isn't necessarily the problem either. They're just so focused on acquiring those new users and it's so costly to them. Crunching the numbers earlier, it seemed like they definitely could have been profitable if they wanted to, but they're so focused on acquiring those new users, especially being with a newer company. They want to get as many new users as possible, and it seems that they are very focused on that right now. You can definitely tell what their ultimate goal is as of right now. So it is possible we can see them turn a profit soon, hopefully soon, if they decide to step back from that and turn a profit. But as of right now, that just does not seem to be the case, and I'm not sure how long that's going to last either. And lastly, we just can't help but look at their competition. Obviously, as I mentioned at the very beginning of this video, you have Amazon, you have Shopify, you even have Facebook Marketplace and eBay, and there's so many companies that are so similar to this one that you can't help but look at that competition as well and make that a bear case for this company. Okay, and lastly, I want to take a quick look at the tip ranks. We like to do that in most of our videos. And you can see here they have a moderate buy rating. And out of 6 total ratings, 2 analysts rated as a buy, 4 said hold, which is a little bit odd looking over at the upside of 60.32% at a $16 average price target. You're probably thinking, why would there only be 2 buy ratings and 4 of them say hold if it has a 60% upside? And this is my theory to that. If you look at the actual individual analysts talking about it, so of the 4 analysts that gave this stock a hold rating, if you took the average of their 4 ratings, you'll see that they predict it's going to break about even this year in the next 12 months. And the reason for that 60% upside is we have a couple outliers with those 2 buy ratings. They're a little bit extreme. The first one says that they'll get up to $19, which is a 90.38% upside. The other guy said $28 in the next 12 months, which is 180.56% upside. So I think that that average price upside is a little extreme because of those 2 basically outlier predictions as of right now. So that's why it's only a moderate buy, but with that 60% upside, I wouldn't really let that fool you. I think that's a little bit inaccurate as of right now, especially with only having 6 total ratings. I'd like to see more analysts rate this stock before I really take away what they have to say on this TipRanks website with this stock. And I think the 2 analysts with these buy ratings having such big upsides is due to the fact that it is definitely possible that this stock can turn a big upside in the next 12 months due to the fact that, as I was talking earlier in the video, they haven't been profitable yet, but they definitely could be if they really wanted to. So if they decided to tweak their approach a little bit and turn a profit in the next couple quarters and kind of step back from that investment of trying to acquire those new users, they're able to turn a profit while also growing as a company, it is definitely possible that this stock could shoot up. I just don't see it being very possible right now, especially because we haven't really seen that approach change at all. They seem to be really sticking with that big investment, little profit type approach right now. So because of that, I'm gonna kind of lean towards the other four analysts that have a hold rating on this company right now. But when I look at this stock in a 5 or even 10 year approach, I do actually like the investment. I just think we need to hold off for right now. And if you've watched some of our previous videos, we like to look at a company's return on investment. Essentially, what that is how much money you invest into your company versus how much profit you take away from that. So with a company like this, taking away zero profit but investing a lot of money, I know that it's a newer company and a lot of times you won't see a lot of profit right away and you want to really bet on yourself, but it's been 10 years and they still haven't seen profit. So I would like to wait on this stock. I think it's a good 5, 10, 20 year investment, but until we see them tweak their approach a little bit, I would actually like to hold off on. I would like to hold off on it right now. But this is definitely a very interesting company and one that I'm going to be keeping my eye on. And what I'm going to do as well is I'm going to also be releasing more videos on this company in the future, whether it's just some updates on what they're doing or if there's any big news with this company. I'm going to keep you guys in the loop as well because, like I said, I think there is potential with this company, and I think there might be a time within the next 12 months that we will be able to buy this and have it be a good investment. So, I'm going to keep you guys updated. I'm going to keep my eye on it, and I'll keep you guys in the loop. And that's going to conclude today's video on the breakdown of Context Logic, also known as Wish. Again, ticker WISH. Hope you guys enjoyed the video. If so, all we ask is that you guys hit that like and subscribe button. We also ask that you guys give us some comments down below. Let us know your questions, comments, concerns, or even if you guys have a stock suggestion that you would like us to go over. And that's going to be it for today's video. Thank you guys for watching.